Hello and welcome back to my channel. My name is Jessica Morehouse and this channel is about all things money. And in this video, you are going to learn all about asset allocation ETFs in Canada. I have mentioned asset allocation ETFs in a few of my previous videos, but I have yet to make a dedicated video about them, which is crazy because I personally think that asset allocation ETFs are such a great investment product for so many types of investors, myself included. This is actually a type of product that I personally invest in one of my portfolios. So I'm so excited to dive deep into this topic for this video. So you are in for a treat. But before I dive into this topic, a big thank you to BMO ETFs for sponsoring this video. You may not know this, but you should. They've got a ton of amazing and free educational content on their website. You can check them out at etfmarketinsights.com. They also have their ETF Market Insights YouTube channel, which I will be linking to, so you can find them very easy in the description for this video. Also, in case you don't know, because I have made quite a few videos over the past several months, several years, I do have some other videos that you may want to check out after this. One about how to build your own ETF portfolio, individual ETFs if you want to go that route. I also made another video about growth ETFs. So lots of great ETF content coming at you. But anyways, we have a lot to cover in this video, so let's get to it. Okay, so let's start by talking about what exactly an asset allocation ETF is. Well, quite simply, it is a portfolio of ETFs that are housed inside one single fund. So inside this fund, there's a bunch of different ETFs that are of different asset classes. So you've got your equities and your fixed income, or sometimes just equities, and they are broadly diversified. So you are getting exposure to different countries and different sectors. In other words, investing in an asset allocation ETF basically provides you the exact same diversification as if you were to invest in 6 or 7 different ETFs. The best part is, though, when you invest in this type of ETF, you only have to buy shares of one ETF, not 6 or 7. Not only that, and this is personally my favorite part, it has automatic rebalancing. So if your portfolio, drifts away from its target, it will automatically rebalance to get back to that target. So for example, if you have a portfolio that's 80% stocks and 20% bonds, and over time it drifts to 70% stocks and 30% bonds, well, it will automatically rebalance to that 80-20 asset allocation. Now, just to be clear, because I have used the term automatic, and I will say these air quotes here, it's not actually automatic. There is a portfolio management team that does this rebalancing for you so they can make sure that they do it correctly. But I guess it's automatic in the sense that you personally do not have to do anything. The fund will always rebalance so it is at its target asset allocation. Now, besides automatic rebalancing and broad diversification, asset allocation ETFs provide a ton of other benefits. Now, the first big benefit is transparency. Now, I don't know about you, but if you've ever invested in a mutual fund and have tried to find out, exactly what securities you're investing in, well, good luck. You'll be able to find the top 10 investments in Fund Facts and even the top 25 in the quarterly portfolio disclosure document. But otherwise, they will not disclose all of the different securities in that fund, and there could be hundreds. Now, that's a big reason why I am such a big fan of ETFs. Transparency. If you want to find out every single security inside an ETF, it is very easy to do so. Now, with asset allocation ETFs, it's a little bit different because it is a fund of funds. So it's an ETF of ETFs. So when you're looking at an asset allocation ETF and want to see what's inside, it will simply tell you all the different ETFs inside it. But then all you have to do is then take a look at those individual ETFs, and then you can find out all the securities inside them. So again, you can find out exactly what you're investing in. The next big benefit is liquidity. So with ETFs, you can trade them as fluidly as a stock. So if you want to buy or sell shares of an asset allocation ETF, it is very easy to do so. Using a discount brokerage, you can buy and sell shares of an asset allocation ETF with just a click of a button during trading hours. This makes it very easy in case you ever want to make a change with your portfolio, or if you just want to cash out and then use that money for a specific purpose. And then there's my favorite part, the low fees. Now, asset allocation ETFs can have higher fees than, say, an individual ETF, but again, you are getting an entire portfolio that automatically rebalances, so you are getting that. And also, when you are investing in an asset allocation ETF, it could save you a ton of time and also trading commissions. Now, in general, asset allocation ETFs have an MER around 0.2%. So what that looks like is if you had $100,000 invested and you had an MER of 0.2%, you'd be paying $200 per year. Now, if you invested $100,000 into a mutual fund and had to pay kind of the average MER for a mutual fund, which is about 2%, 2%, you would be paying $2,000 per year. So already investing in an asset allocation ETF, you'd be saving $1,800 per year, which again, compounded year over year, could equal some really big money. Now, before showing you some examples of some asset allocation ETFs, so I can give you more of a visual for what they look like and how they work, I do want to share a few important things because I know I'm going to get questions about this in the comments. Although I love asset allocation ETFs, they are not 100% automatic. There's a lot of automation, but there's still quite a few things that you do have to do manually if you want to invest in them. For example, I mentioned that you need to open up a discount brokerage account, and then you need to fund that account with cash, and then use that cash to buy shares of that asset allocation ETF. Well, when you're buying those shares, you do have to place that trade manually. There's no automatic way where you can just get money in there and it automatically buys shares for you. You do have to manually place those trades. Not only that, if the fund pays you interest or dividends, well, it is going to pay you in the form of cash inside your account, and then it's up to you to reinvest that money. There are other things like robo-advisors that automatically reinvest any of those payouts, but if you're doing it on your own through a discount brokerage, completely self-directed, it's on you to reinvest that cash. That being said, if you are getting paid out dividends, you may be able to set up a DRIP, which is a dividend reinvestment plan, and I'm sure I will make a video about that in the future, but not today. Not today. Okay, so now let's take a look at some examples so you can kind of have a better idea of how these look and how they work. And I'm also going to kind of share, some examples of, particular investor profiles that might fit each ETF. With that, I do want to just, be clear. I'm not making any recommendations. I'm not saying this is what you should do. I'm not giving you advice. If you actually want to invest in one of these and you need some guidance, then I would highly recommend working with a financial professional with credentials to do that, such as a fee-only CFP or something like that. And then they can take a look at your whole financial picture and your investment goals, and you can build a solid investment plan for your future. This is just for your kind of information and just to give you an idea of how these could work or fit into someone's portfolio. Let's take a look at the first ETF. All right, so first I'm going to navigate to this webpage on bmogam.com where it has all of the different asset allocation ETFs listed. Let's take a look at the BMO Growth ETF ZGRO. So as you can see here, its asset allocation is 80% equities and 20% fixed income. So as you can see in the fund benefits, this ETF is designed for investors also looking for growth. However, it would be more appropriate for an investor who doesn't have as high of a risk tolerance as someone who is comfortable investing in 100% stock. It could also be for an investor with a slightly shorter time horizon as well. In other words, since this ETF is invested in 20% bonds, this ETF will be less volatile. And as you can see right here, its risk rating is low to medium and its MER is 0.2%. And its inception date is February 15th, 2019. And just going up here, let's take a look at its holdings. So remember, it's 80% stocks and 20% bonds, and it has 10 holdings, so quite a bit, obviously, because it has that fixed income portion. So the heaviest weighting is in US stocks, and then Canadian stocks, international stocks, and then we've got some bonds right here. We've got some emerging market stocks, and we've got some government bonds, and we've got some US mid-cap stocks, and some US midterm bonds, and we've got some US small cap stocks. And if you look at price and performance, there is a little bit more information because it has been around for a few years now. So if you look at this is since its inception date, you can see the total growth over time. So since inception, so using the example of, $10,000, that would be worth at this moment, $12,510.45. Of course, at the moment that I'm doing this video, the stock market is a little bit down. So at its peak, if you had $10,000 invested, then it could have grown to $14,240.81, which is 42.41% in total growth. Now, as you can see here, its market price, so to buy one share, you need $35.09. And there's a little bit more information about its performance. So, it's 1 year, 2020, hasn't done so well. But again, that's the stock market right now. But its 2-year annualized return was 4.43%. Its 3-year was 4.51%. And since inception, its growth was 5.43%. Looking at its calendar performance, you can see, year to date in the negative, but in 2021, it had a return of 14.87%, in 2020, 10.69%, and in 2019, 11.07%. Okay, next, let's take a look at the BMO Balanced ETF, ZBAL. So as you can see here, its asset allocation is 60% equities and 40% fixed income. So just taking a look at its fund benefits, as you can see here, this ETF is designed for investors looking for growth, but also income. So what this means is it's appropriate for an investor that wants to grow their capital, but not as aggressively as someone who would invest in ZEQT or ZGRO. Moreover, with such a high proportion of bonds in this ETF, this investor is also looking for much less volatility in their portfolio, as well as consistent income from the interest earned on those bonds. As you can see here, its risk rating is low to medium. So as an example, this investor could be someone who has a moderate to low risk tolerance and or someone who is approaching retirement age or is currently retired. So just taking a look at things, it has the same MER, 0.2%. Its inception date was February 15th, 2019 as well. And if we go up and take a look at its holdings, here we go. It's got 10 holdings, and just looking at them, obviously there's a higher proportion of bonds. So the heaviest weighted ETF inside this asset allocation ETF is the BMO Aggregate Bond Index. And then after that, we've got US stocks, Canadian stocks, international stocks, government bonds, emerging market stocks, midterm US bonds, US mid-cap stocks, and then US small-cap stocks. Looking at its all-time performance, so if you had $10,000 and you invested that when it started in 2019, at its peak, you could have grown that amount to $13,406.63, which is a return of 34.07%. And that would have been in December 29th, 2021. And as of me recording this portion of the video on July 27th, that amount would have been worth $11,772.14, or a return of 17.72%. Now, as you can see here, the market price for one share is $33.15. And just looking at its performance, again, this is what's going on with the stock market right now, but its 3-year annualized return is 2.79%, and since inception, 3.91%. Looking at its calendar performance, year to date in the negatives, but in 2021, its performance was 10.32%, in 2020, 10.27%, and in 2019, 9.65%. So there you have it. That is asset allocation ETFs. I hope you really enjoyed it. A big thank you to BMO ETFs for sponsoring this video. And like I mentioned, make sure to check their free educational resources, more on this topic and other topics related to ETFs at etfmarketinsights.com. And of course, their YouTube channel, ETF Market Insights. I will link to everything in the description for this video. I will also link to some of those videos that I made reference to at the beginning of this video. I have one again on how to build your own ETF portfolio from scratch, and also some information about growth ETFs, so you can just know a ton about ETFs after all of these videos. So I hope you enjoyed it. Make sure to comment if you have any questions. If you liked this video, make sure to like it. And if you're not already subscribed, make sure to hit that subscribe button. But that is it for me. Thank you so much for watching, and I will see you next time.